Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for April 25th, 2024. Well, obviously, Meta disappointed the market last night, and we're looking at a very different situation here this morning with the bears seemingly waking up and getting a little bit active this morning. Let's take a look at what happened overnight. First off, we had Asian markets mostly lower last night. Hong Kong and Shanghai were just ever so slightly higher, where the rest of Asian markets were lower, but not terribly. The Nikkei had the worst of it, and they were down 2.16% or $831. If we take a look at European markets, they are mostly down this morning, with only the FTSE up just a bit, up 54 points or 0.67%. The DAX is down, CAC is down, so we're looking mostly down in European markets. And of course, here in the United States, we're looking at a pretty substantial gap down this morning from, well, sentiment kind of changing here just a little bit in the hopes that those big techs can continue to drive the market higher. So a little bit of concern there. If we take a look at oil prices, well, oil prices are up a little bit. We've got oil up only 12 cents, though, at 82.93. Brent is up 13 cents at 88.15. And natural gas is essentially flat here this morning. If we take a look at our precious metals, gold is down just ever so slightly, down 10 cents. Silver's up, copper's up, platinum and palladium are lower this morning ever so slightly. If we take a look at cryptos, well, we had kind of a rough whipsaw yesterday in Bitcoin, closing down over $2,000 a coin, and this morning we're down $714 a coin, and we're right across the board there on those cryptos at the moment. If we take a look at our bond prices in here, this might be one of the reasons that we're struggling here just a little bit. Our 2-year bonds have come down nicely at 4.92%. The 10-year, however, holding in there firm at 4.64%, and the 30-year actually ticked up from yesterday at 4.78%. So still some pressure in there on those bonds. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. So good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Well, we've got a big day of data ahead of us with Microsoft and Google reporting this afternoon. Just a huge number of earnings reports rolling out today. So you'll want to be keeping an eye on that. And then, of course, we're going to be facing some big economic data here this morning as well. We'll cover that in just a little bit. Before we jump in, though, let's take a look at these index charts and let's try to shake off some bias. We want to look at them for what they are, not for what we want them to be, and take a look and see how we might want to approach the market for today. If we dial in here on the old diamonds, well, yesterday was probably just a little bit disappointing, but it wasn't terrible. A little pullback. We reacted negatively up here to this price resistance, pushing back. Unfortunately, the worst of it is today. The follow through to the downside is probably going to raise some concern here in the market. Now, if those bears continue to push, you can see we could push back down through this candle, and if we can break that back down through there, I'm suggesting we're going to come down into here. It's really not that big a stretch to see that possibility occur. Now, if this area were to break, then coming down into here, we'd be back down here testing these recent lows, and that would probably raise some pretty serious concern in the market. And of course, with the big tech reports, that would be an awfully big stretch to move to the downside that far. There's still a lot of anticipation in these big tech reports that they're going to produce super earnings and be really beneficial to the overall market. And I see every reason to believe that that could be possible. So that being said, if the bulls were to find inspiration today, if we can hold a higher low in here, so for example, if we were to hold right in here and bounce back up, well, that begins an upside trend. If we pull back a little bit more, we hold that price support. Once again, that could begin an upside trend. So if those bulls can get going here today, first thing we need to do is break back through that little resistance area right there in the chart. It kind of corresponds to that big black candle right there. We need to break back through there, and then we would look at a stretch up into here to see if we can test this resistance in the chart. Once again, breaking through that, we'd be up in here into this fairly major area of price resistance in the chart, and we will want to be keeping an eye on our moving average levels up here, because once we push up into this area of the chart, we're coming into that 50-day moving average, and that 50-day moving average is not looking all that healthy here, kind of bending down on that chart. So watch that carefully. We could run into significant resistance in that area. If we take a look at our SPY, our SPY, end of the day yesterday, it wasn't a bearish engulfing, but it certainly is a dark cloud cover pattern here in the SPY. And the critical thing is whether or not we're going to follow through to the downside this morning or today. We'll want to watch that pretty closely. If we were to push on through here to the downside and the bears continue to stay active, well, breaking back down and maybe breaking down below this little area price support right here could be significant enough that it would push us right on down to retest these support levels. If we break through some of these support levels in the chart, then my guess is we would come right back down here and retest our current lows in the market. Breaking on through there is probably going to require more bad tech news to get us on past that area. Now, once again, if the bulls can find inspiration here today and create some kind of a higher low in here, and it's possible we could just consolidate here as well. Consolidate and then start pushing up. That's an upside trend. If we continue to pull back and we hold a higher low, well, that starts an upside trend. So we'll want to be watching for those possibilities. If the bulls do push through today, find that inspiration in the data, start pushing up, well, breaking through this resistance will be the first area that we're going to have to be watching, and it could do that pretty easily. But then we'll be looking at the top side of these candles, and we'll want to be watching that little area there for price resistance as we move back up. Pushing through that area, we're going to push right up into this fairly significant level of price resistance here in the chart, and that downtrend that we'll want to be watching. And remember, getting up through there could be a little bit of a challenge because we're going to be looking at moving averages right in that area as well, providing that price resistance in the chart. If we take a look at our QQQ having a little bit of a rough day this morning. Right now, Dow futures are certainly bearish, but we'll see if we can bounce that back up here this morning. As you can see, we are higher than we were at yesterday's close after those numbers. So definitely a dark cloud cover candle here on that chart. So if the bears were to continue to push, first area here in the chart that I would be looking for is a retest right through here. Can we hold that area of support? If we can, then we're probably in good shape. But if that were to fail, I'm going to suggest we start coming down into here, and then on down to retest these recent lows in the chart. And certainly does seem like that could be a possibility, particularly if Microsoft and Google were happening to add to the weight in this market on the big tech rally. So keep a close eye on that. If the bulls were to find some inspiration here in the market today, then pushing back up, we'll want to be looking for a break of that resistance, come back above that area. And if we can get back up through there, I'm going to suggest somewhere up in here. We've got quite an accumulation of price action in here that could stall that move to the upside. But breaking through there, then we start pushing up into these areas of resistance in the chart and could progressively start moving up. Now remember, we've got this downtrend in the chart, and the QQQ 50-day moving average and moving average levels are still up here significantly. So if we can get good reports out of the remaining big techs, well, maybe we can push right back up in here. But there's just enough concern here in the market that watch for some tremendous volatility in the price action in here. Be very, very careful. If we take a look at our Russell IWM, well, IWM pulled back a little bit yesterday, but not as bad as it originally was looking in the chart. And you can see right now in the pre-market, it's trying to hold in there. We'll want to keep a close eye on that. If those old bears get active, well, we could see a push back down in to test that trend line here in the chart. Breaking back down below there, I think this big white candle would be kind of a critical area for us to test and hold. If we were to fail through that, then I think there's that possibility that we could move right on back down, retest this area of support, and maybe even this low in the chart. It certainly looks possible. Beyond that, this gets pretty painful here in IWM. We would sink back down and possibly test our 200-day moving average. Seems like wouldn't be all that much of a surprise if that were to occur. If we were to bounce back up here in the market and the bulls stay in control, first thing we'd look for, break of this little resistance in there, then stretch right up here and see if we can test this bigger resistance in the chart there on IWM. Breaking up through there, well, you can see there are some intermediary areas right through here that we could push up into to find that price resistance. Now remember, big tech doesn't have much to do with this, so we're not going to get a lot of price action because of Microsoft and Google in here, but we could change sentiment. Now if we take a look at our moving average in here, you can see we've got that 50-day moving average right up in here. So as we push into this next level of resistance, we want to be watching for those potential failures along those areas in the charts. Let's take a look at our VIX. Our VIX had a nice pullback yesterday, showing maybe just a little touch of fear right at the end of the day as those reports came out. But you'll want to notice we broke this trend here to the upside and we fell below this level in the chart, that support level in the VIX. So there's every reason to believe if we get some really good data points here today that we could push this right on down into this area. If we happen to get some bearish information, though, this wouldn't be all that odd of a place to see a bounce and raising of that fear. The question will be, is if we rise up here, will this hold as a resistance, or will we bounce through it and eventually hold that area up there as a price support? Keep a close eye on the VIX, and like I said, I think anything is possible here. One of the things that really damages traders is they try to predict what's going to happen next. The best thing we can do is just follow the price action of the charts and stop predicting. And when we look at the market right now, there's really no way to predict which way the market's going to go. The reactions in this market are extreme. And if you're finding that you're struggling in your trading, it may be because of that problem of predicting. I do an awful lot of individual coaching with folks, and I find that that is a very, very common problem that people struggle with. Instead of just following the chart, they're trying to predict what the next move is, and it's causing them an awful lot of losses and stress in their trading journey. So just be really, really careful with that idea of predicting. When we're in a market situation like this, I honestly think anything is possible. We could gap huge to the upside, the downside. We could go straight sideways. Anything is possible with the emotion that we see in this market and all the uncertainties that we have out there. Let's take a look at our T20s. Our T2122 did pull back yesterday, so we had more stocks in a pullback, as you can see, than we had going up yesterday. But it wasn't terrible. We came back to the middle of the road here yesterday. Unfortunately, that middle of the road is going to be broken this morning, I think, at the open due to those meta reports and maybe a little bit of a bearish shift in sentiment. So keep an eye on that. But if the bulls do find inspiration, we've certainly got about an equal amount to the upside as we do to the downside. So be prepared for just about anything, and I would watch for whipsaws. No matter what our initial move is, watch for those whipsaws to occur in the market. If we take a look at that T2108, T2108 hooked over just a little bit yesterday, but once again, nothing major. The percentage of stocks above the 40 slipped just a tiny little bit. We did react negatively to this area of resistance in the chart, but it wasn't so much that it was a major deal. If the bulls find inspiration today, we could certainly pop up on there. The major concern, I think, right now for the market is if we were to really start stretching this back down. We've got some support levels down here that we could test, and unfortunately, we could go as low as this pretty easily if we continue to see earnings disappoint on that big tech side. If we take a look at our T2107, T2107, as you can see, also had just a little tiny pullback, but there's really nothing wrong here in this chart. We've still got support underneath this price action. Clearly we've got some resistance above, so we'll want to be watching as this reacts today to all of this data. Remember, this 50% area is likely going to be kind of a psychological important area. If we start seeing more than 50% of our stocks below the 200-day moving average, that sentiment kind of starts to slip to the downside. And then if we take a look at our T2101, well, T2101 was a little bit on the confusing side yesterday because our volumes in a lot of our indexes were pretty low, and here we were trying to push up, and we didn't really move much here in T2101. So I'm gonna give the bulls the benefit of the doubt here and say they had enough energy to push us up a tiny little bit here yesterday in T2101. Unfortunately, I think what we're likely going to see here at the open today is a pretty big shift in this back down. So we'll want to be watching carefully for that. I shouldn't say that. Not back down. The market back down. We might see a shift in this going higher, but this being on the sell wave here in the market as that breath comes in and a lot of folks run for the door to protect their capital here this morning. Let's take a look at our economic calendar for today. And our economic calendar, boy, we got a big one coming this morning. We're going to be looking at this GDP this morning at 8:30 before the bell. Right now, they're looking at a decline in the GDP coming in at 2.3 rather than 3.4. Personal consumption is looking for a decline to 2.8. So we'll want to keep a close eye on this. It certainly is a market moving report, so be prepared for that. We've got international trading goods that will be coming out. We're looking for a $91 billion trade deficit. It is interesting to me how we have just gotten so comfortable with being so backwards here on our trade deficit. The market doesn't seem to care most of the time about that, but yeah, watch that closely. And then jobless claims. Of course, jobless claims have not been helping us out on that interest rate front. They've been remaining way too strong, and you can see they're expecting about 215,000 here today. That would not be a move that would really help out the Fed. we're really going to have to see that number go up substantially to help out the Fed in lowering those rates. So watch that carefully. After that, we've got a retail sales number, wholesale sales, or hotel inventories, wholesale inventories, retail inventories. I'll get it right. Pending home sales will be coming out. They're looking for that to come in at a 1.0, a decline from last month. Probably not a big surprise on this, considering that rates have gone up so much. So watch that. Natural gas report this morning, and then we've got some bond announcements. We've got a Kansas City Fed manufacturing. They're expecting that to come in at -7, still saying on the rough side there on our manufacturing numbers. And then several bond auctions here today with a Fed balance sheet. Looking into Friday, we don't relieve that pressure here on Friday. We're going to come into the personal incomes and outlays, that inflation report. I think anything is possible here. So watch carefully for that. We're going to start worrying about that really soon after we get through some of this data today. And then we've got consumer sentiment and a Baker Hughes rig count for tomorrow. Let's take a look at our earnings calendar. My goodness, our earnings calendar is absolutely huge. There's no way I can go over it. You'll want to click the link just below the title of the video. That'll take you back to the morning blog. I'll have the list of all of those stocks reporting this morning, those reporting this afternoon. So keep an eye on that. But some of the highlights in there, we're going to hear from like NDAQ this morning. We're going to hear from American Airlines this morning. We're going to hear from Love today. Not getting much love there. We're going to hear from Harley Davidson. We're going to hear from CNX. So a little bit of energy in here reporting, and that's just a tiny few of the reports that will be out this morning. If we take a look at this afternoon, the most notables are going to be Microsoft, of course, and we're going to be hearing from Google this morning, or Alphabet, and we're also, I think Roku is in there this afternoon. We've got Gilead that will be reporting. We're going to hear from TMUS. We've got Weyerhaeuser that will be reporting. Intel will be in there. So we've got quite a few reports to be paying attention to today. It is a huge list. They're really pounding those hard this morning. So keep a close eye on those. How about we take a look at a few stocks that could be setting up for today? But before we do that, everyone, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And just a huge shout out to everyone who clicks that thumbs up button, leaves a brief comment. That helps the channel to grow. Thank you so much for everyone who does take the time to do that. Even that emoji helps out a lot. It's engagement with the video. So thank you so much, everyone. I truly appreciate it. Let's take a look at some of these stocks that could be setting up. Remember, everyone, these aren't recommendations to buy or sell any security. You're going to have to do your own due diligence. Be very careful in this market. And remember, the rest of this week, high volatility is likely. So no matter how good a technical analyst you are, you may run into some trouble, because when we are whipping the big price moves that we are right now, even the best technical analyst will lose more trades than normal in a market like that. So let's take a look at some of these. First off, I want to mention the dollar UUP. UUP has been pulling back a little bit, but then driving a little bit higher. We had some more. We had the yen hitting another fresh 34-year low, creating all all of these currency fluctuations here in the market, so we'll want to keep an eye on this. We certainly filled that gap here on UUP, and now we're trying to make that decision in this chart. Are we going to hold this upside trend and continue on to the upside, or are we going to slip that trend and maybe start falling here in the US dollar? Remember, as the dollar strengthens, usually the market weakens overall, so we'll want to be pretty closely focused in on what's happening in those bond yields here in the market. Now, that being said, there's quite a bit of potential trades that could be setting up here for today. If we take a look at some of the inverse, DOG came back, found some support here. This is an inverse on the Dow. You might want to keep an eye on this, and this is just a one buy, meaning it's 1 for 1 on the Dow. There's no big leverage in this, so watch that carefully. That is setting up a possible bullish move to the upside here this morning on these inverse ETFs. You could take a look at like DXD if you wanted something that's twice leveraged on the Dow. That would certainly be doable. If we take a look at SH would be an inverse setting up on the S&P 500. That's something you might want to be keeping an eye on. If we can hold some support in here and get those bears coming in, this might be an opportunity for you. And of course, there are certainly other inverse ETFs. This is just a one buy, and it's not leveraged, so keep an eye on that. You could also look at like PSQ. PSQ is an inverse on the QQQ, and again, this is not heavily leveraged. It's a one buy on the market, so keep an eye on that. We may be finding that price support in here and looking for that upside move here in PSQ. And then for IWM, you could look at RWM as a single wide inverse in here. If we find this support and start pushing back higher here today with a little bearish wave, certainly we should be watching some of those. The potential is there, so be really careful. Let's take a look at, and by the way, there's tons of others if you want leverage. If you look at, if you want something on the VIX, UVXY has pushed back, finding some support in here. Keep an eye on that if it bounces up off of this and we see that VIX starting to re-engage to the upside. Watch those things closely. Other places that you might go, first off, when we look at geopolitical situations in the world, they're really not improving all that much, and RTX continues to set up in this consolidation. We broke through this resistance up here, and we're certainly holding it in a nice consolidation pattern. If it can break through up here, then we have that chance that we could run up and test these all-time highs and maybe even break out here in RTX. So keep a close eye on that if that happens to make a decision. Now, because we have slipped beyond trend, it's also possible if we can't go this way, well, there's going to be an opportunity cost loss here before too long in a lot of traders. And if we can't go that way, then they're going to start selling it off. So watch carefully there in RTX. If you take a look at like General Dynamics had a rough day yesterday after its earnings report, breaking back down. So that might give you a little bit of hope that tensions are easing a little bit, and maybe we can see some help in that war situation. But right now we're still seeing plenty of upside opportunity in things like Lockheed Martin. I'd keep an eye on that. You can see trying to deal with this big resistance here on the chart and possibly popping through, and may also be one of those reaching those record highs in the market. Let's take a look at energy. By golly, we've seen oil prices coming down, but that hasn't changed the bullishness here in oil stocks. And you can take a look right here. XLE just slowly grinding to the upside here. We did see in our petroleum status number yesterday a decline in supplies, so that does help support these energy companies and those energy prices. So keep a close eye on that. There's a lot of stocks in here to take a look at. Some are looking bearish, some are looking bullish, but I would watch that pretty closely for that push to the upside. And it may be worth, we've got Valero reporting today, but we may want to look at some of those refiners, because as we're seeing those supply declines are coming into play, we need those refiners to really be working harder, pumping out more energy. So watch that carefully. Unfortunately, what I'm seeing here in Valero is the possibility that this could set up a head and shoulders pattern. So watch that carefully. If the neckline of this pattern were to break, I would be watching for that to potentially be a short. Let's take a look at a couple other areas of the market, and let's take a look at those financials. Our financials, whoops, not steel, XLF, there we go. XLF, we had another push this morning in the pre-market, trying to push our banks back to the upside. But what you want to notice is that we're still underneath this downtrend in here. So this is going to be really critical on our financials. Will they be able to hold the high or low in here? If they were starting to show failure, that's the classic short here in the market. We'll want to watch carefully for that. We run into resistance and downtrend. If we can't push through there, that could end up being the classic short here in the market. I'm not saying that's going to occur, but it's something that I would be paying attention to. And then when we take a look at retail and some of these defensive sector stocks, defensive sector has really been showing some strength here overall, and that's people running to safety, looking for good dividend payers, looking for some of those standard staples out there in the market. And you can see Walmart, nice day yesterday, trying to push up and might break that downtrend here in the chart. Keep an eye on that. Costco also making a little bit of move to the upside. And one other place that I wanted to take a look at, and all of a sudden I'm losing it. Oh, utilities. Utilities are showing tremendous strength here. And again, this is a defensive play. Folks are running to the safety of utilities. Obviously, we're going to always need them, even in the possibility of a recession or stagflation. We're going to need them. And we are seeing quite a run to those and the big dividends that these tend to pay. So keep an eye on that. It's also showing us that concern here in the market, and maybe that rotation from some of the big tech giants and things like that, we're rotating into more safety type positions in the market. So with that, everyone, I want to wish you all a fantastic day. Thanks so much for being here. I do truly appreciate it. Wish you all the best today, and I will see you right back here bright and early Friday morning. Have a great day, everyone.